Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we bring you the top 5 options plays for the upcoming week. Now, keep in mind, guys, on the channel, all of these plays are going to be for selling options, not buying options. So we're going to be writing options to generate premium. Now, on the channel, this is the exact strategy that I used last year to make over 75% annualized ROI, and is my preferred trading strategy that I showcase on the channel Monday through Friday in terms of my regular trading activities. More specifically, it is the put wheel strategy. It is designed to write puts at designated strike prices for a given amount of premium. And if the stock maintains above the level of the written put, well, we just collect all of that juicy premium by the week end. It's a very easy strategy to run, whether you're a beginner, intermediary, or advanced investor. And it is very stress-free and relatively low risk as well. So if you want to see my full 30-minute breakdown of the strategy, I made a video specific for that. I'll leave it in the top right-hand corner of the channel right now, and I'll also leave that down in the description if you want to take a deeper look into this strategy. Now, in terms of today's video, we're going to go over a few of the strategy rules, just do a quick recap on those. We're then going to take a look at last week's top 5 options plays and see how they did. And then we're going to take a look at this week's top 5 options plays as well. So with all that out of the way, guys, let's get right into today's video. So in terms of the setup for the week here, guys, the bulls are still in relative control of most of your major indexes. We have been somewhat cautious over the past few weeks because the bulls have been unable to really push new highs in your QQQs and even on the SPY as well, right? We're kind of just struggling a bit here. You can see loss of the trend lines as of last week. And so we're kind of watching out for that. So the tone of the week is still cautiously optimistic. We are still bullish, but we are going to be a little bit careful with our strike price selection. Really want to get some low strike prices for the stocks we're looking at, because this week we have a very big day on Wednesday. Wednesday is your CPI day. So take into consideration, guys, that the consensus is about 3.4%, which is the higher end of the sticky bound of inflation. We've kind of been ranging between about 3.5% on a year-over-year basis. So if this number comes in a little bit high, guys, well, such as the numbers in January and February, expect the markets to react negatively to that. So because of the heightened risk this week, we're going to be quite cautious on our strike prices that we pick. And the stocks that I've picked for you guys are also all at very good levels of support as well. So in the event that we do get somewhat of a big sell-off on Wednesday, we should be able to have a little bit of a cushion between our designated strike prices and the price that the market opens on the Monday or Tuesday. So let's get right into the strategy rules here, guys, right? So in terms of the strategy rules, we'll go through these very quickly. I don't want to spend too much time on these. So number 1, guys, always going to be writing puts on a solid company. Please, please, please never write puts on a company that you know little about. It just leads to difficult risk management thereafter if you are assigned on the company. So rule number 1 is always never write puts, or any options for that matter, on stocks that you do not want to own. That is very, very, very crucial, guys. And you'll see always the stocks that I'm recommending on the channel are pretty much known as your blue chip stocks, right? Stocks that everybody knows a lot about, and it just makes for the analysis and managing the position a lot easier. Number 2, we want to be writing puts on stocks that are in monthly uptrends or long-term ranges. All of these rules, guys, are to add all of the probabilities on our side that we do not get assigned over the course of the week. Obviously, being assigned is not a bad thing because then we can write covered calls, but we want to minimize our probabilities of being assigned as much as we can, keep that capital in our portfolio, and just keep farming that premium every single week, right? Now, number 3, we want to be writing no earnings. We want to be writing puts on stocks that do not have any earnings this week. That is very, very important, guys. Earnings can go either way. It's a very volatile event, and it's extremely hard to predict the price action after an earning. So if you just want to be safe, never write any puts in a week that has earnings. As you have well may known already in the markets, guys, you can be very bullish on a stock, and a stock can have a very good earnings call and report very decent profits. But as you've seen before, there could be some negative guidance, or maybe the CEO says something the market doesn't like, and the stock just drops 10-15%. So as a general rule, guys, just do not do it. For the most part, it is not worth the additional risk. Number 4, we want to be writing puts at an area of support or a breakout retest. I always bring out this chart when I do this in terms of Autodesk, right? So if you're wanting to write near support levels, you would be targeting the bottom end of a very nice range like this, right? want to be writing puts down there because we have a very good probability that our long-term bulls that are holding up this area will come in and play ball again and help get some lift off that position. So that's why we always write near big areas of support. And the breakout retest trade, guys, very easy, right? You see this weekly nice uptrend here, breaking out of the top end of our range, retesting the range as support, and then run. This level right here, the retest, is a very high probability trade. So those are the two types of trades that I take on the channel specifically, guys. Number one is going to be the support trade directly, and number two is going to be the breakout retest. Number five, we want to be writing on red or flat days. This goes in with our next bullet point, which is writing at or lower than the expected move. Now, the reason that these two are important, guys, right? A stock always has a given expected move for any week. Take a look here on the screen. I've pulled up Palantir. This, if you don't know what the expected move of a stock is of a given week, guys, just go to optionsai.com. They have a free tool. It's not sponsored by me or anything, where you can get the expected move for the week. And you can see Palantir here, the lower end is about 21.95. That's what the Wall Street is expecting the lower end of the expected move to be by the end of the week. You can see that that would be a drop of roughly 4.4%. So we go around these levels, guys. The reason that these two are important, because if a stock is only expected to go 5% down in a given week, and then on Monday, it already opens up 3% to the downside, well, you know that most likely it only really has 2-3% to the downside left from the expected move. So we want to be writing, whenever a stock opens red, we can write even further below our desired expected move, which just once again increases our probabilities of not being assigned. That's why I always write puts on stocks that are red in a given day. Now, the before last point here, 0.5 to 1% in weekly premium. So that's how much money we want to make from writing puts. Now, why 0.5 to 1%? Well, that is the art of options, guys. It's taken me a few years to design the perfect area where we should be writing puts at. And I'll make it very simple, right? If we're getting, in terms of the premium collected, right? So if you take a look at your strike prices right here, let's say we go up on Shopify, 1% would be pretty much, if you're looking at 1% of a strike, you should be able to see about 72 cents right here. So you can see the $73 strike on Shopify gives you about 79 cents. That is 1%, right? Because if we were to divide, 0.79 divided by your strike of 72, you can see that is over 1% for the week. Now, 0.5% is obviously half of that, right? So you'd be looking about 35, 36 cents right here, and that would be available to the 71s. Now, the reason I chose this range, guys, as the sweet spot is just because below 0.5%, guys, you just don't get enough money, right? If we were going for the 68s, you only get about 10 cents. That's really not high enough of ROI for it to be worth putting up $6,800 of capital. And number two, to the upside, over 1%, it's just too risky, guys. It just becomes too close to the available strike price. Take a look at these 74s, right? Shopify last traded about 75.28. And, over 1%, it could be giving you $1.12, right? Which is well over 1% per week, but it's just too close, guys. It's just too close to the current price. You run the risk of being assigned. That's why I say the sweet spot is between 0.5% to 1% in weekly premium. It gives you enough money that it's worth your while to make the trade, but also it gives you a very good probability of not being assigned. If you're always trying to get as close as possible to 0.5%, which is really what I try to aim for, even 1% is a little bit rich depending on the stock. If you're just trying to stay close to 0.5%, guys, that's about a 90% win rate on most of your trades. So that's why I always take that. And then lastly, guys, we're going to take profit at 90% of the contract value. The beautiful part of this strategy is it's so low management. It really only takes me about, anywhere between 15 to 30 minutes on a Monday and a Tuesday. So the 2 days to start off the week to find all my plays and then enter all the plays. Then you just enter them and you let the market do the rest. Since we're writing options, the time decay works in our favor, right? So that's what we just want to do. We just want to let the stock ride it out over the course of the week. And if ever the contract hits 90% of profit before the Friday session, you need to be able to take that, right? The goal is not to sit at our charts 8 hours every single day and monitor these things. That's why we use the put wheel strategy. It's a very passive strategy, very easy strategy. So if you want to make it even easier, don't forget to set a 90% take profit order on all of these short puts that you write. That way, if you're not at your computer on a Wednesday or a Thursday, when the contract ends up almost worthless, well, it just takes profit for you and you're out of the trade. So with all that out of the way, guys, let's jump into last week's plays right away. And you'll see that they were very, very good indeed. And I'm proud to say, guys, right, that in the 8 weeks or so that I've been doing these top 5 options plays, out of all of them, there has only been one play that has ever been assigned from all the top 5 plays that I do give on the channel. And that one play is this one right here, was Apple. About 3 weeks ago, I gave the 172.50 strike. And if you would have taken that, you would have gotten assigned. However, the stock has maintained very close to 172.50 ever since. So you would have been able to write juicy covered calls for the past 3 weeks. And if you have been writing covered calls at 172.5, the assignment price for the past 3 weeks, your average cost basis should now be maybe 168, maybe even 167 below the current price right now. So it's actually a profitable trade, even if you were assigned there. Every single other play of these top 5 plays that I give on a weekly basis, either they haven't provided a decent entry, so there's just no trade at all, but all the ones that have provided an opportunity for entry, every single one, except for that one Apple trade, has all ended for a win. So I'm very, very happy for the way this series has been evolving on the channel. Now, that being said, let's jump right into it. So last Sunday, we were giving Apple. So Apple, what were we looking for? We were looking for the 167.5 strike. Now, Apple did a very good job of maintaining this support level. It's a very juicy area of support around here. You can see it come in once again a few times in the past as well. So last week we were going for the 167.50s, and as a matter of fact, they did open up. So take a look here on the Monday session. We were trading right around 170, and even on the Tuesday down in the 168s, it did open up the 167.5s, and I took that trade myself. Let's take a look at my portfolio. So if we're taking a look here, you can see that I did write Apple right down here, first thing Monday morning, pretty much the 167.5s, and I got over here on the right-hand side about 58 cents for them. Now, I wasn't as patient as I could have been. If you were really patient, these contracts actually did come up all the way to 80, 90 cents on the bid, throughout the morning on Monday, but even throughout the day on Tuesday as well. So this was a very good trade, and obviously Apple ending above 167.50, we were able to capture all of that juicy premium by the weekend, closing the trade in a very big win. So very, very happy with the way this Apple trade played out. We've been playing this one for a few weeks in a row, guys, ever since we've been consistently down in lower 170s, and the trade has always been a relatively winning trade, except for that one event a couple weeks ago where some of you folks may have been assigned at 172. But as I said, being able to write covered calls in this area ever since, you should now be still well into profit. And it's such an amazing company at such a great discount that I really don't believe anybody is nervous about holding Apple in the lower 170s, right? Now, moving on to our second trade that we were looking at, we were looking for Palantir. So Palantir, we were eyeing for the 21.5s. And when the Sunday video was filmed, guys, this was the most recent candle of trading 2 Fridays ago. And then on Monday, we had a glorious opportunity here. Take a look here. Monday, we actually came down to the 22.50s. And on Tuesday, an even better day, we came down all the way to 21.80s, right? And we were looking for 21.5 all the way down to $20, as low as we can get while still getting 0.5% for our puts. So take a look at the trade that I took on Palantir myself. Only did one contract. I went a little bit light, expecting maybe it to fall a little bit more here on the Tuesday session. And then when the Tuesday session happened, I didn't go for that one specifically. I went for another contract of Expedia, and I went for ON Semiconductor, but I did participate in this Palantir trade. You can see this right here. 21.5s, they were written pretty much on Monday morning around 11 a.m. And we got 14 cents for those, so well over our 0.5% rule. And we were obviously able to close those trades for a big win because Palantir closed above 21.5. So this whole lower area, such a juicy area for trading. Very happy with the way that trade played out as well. So another win on last week. And then the third ones was our duo of semiconductor plays. We were looking at either AMD or ON Semiconductor. Now, let's do AMD first. So AMD, where were we looking, guys? We were looking for the lower end of this previous range of consolidation, as close as possible to our green box, which really starts about 164 down to about 158. It's huge support in January and February, and it is the area of our previous all-time highs as well. So we were looking for maybe a dip down, aggressive dip down here, and act as a first touch of support. And that did, as a matter of fact, happen last week. but it happened late on in the week. So AMD really on the Monday and the Tuesday session only got as low as about 175, 176. We were looking for 167.50 and below, towards 167.50 and 165. They did not open up here, guys. The closest we could get was about the 170, 172.5 strike, and that was a bit too high. I want it to be below 170, maybe the 167.50s or the 165s. They did not give it to us until the Thursday session. Obviously, we can't really trade those on Thursday because there's only one day of trading left, right? So you would have had to take these on Monday or Tuesday. Thursday was a no trade event for these. So unfortunately, this one I did not take because it didn't really provide an entrance opportunity towards 167. However, the idea was good, and we did get our first touch here. AMD will be looking at it this week as well. The one that I did take in terms of semiconductors was ON Semiconductor. ON Semiconductor, guys, we were looking for anything in the $69 to $70 range, as low as possible, while still getting our 0.5% rule. Because this area is such a juicy area of support, we want to get as low as possible into that to give us the best chance of getting, oversold conditions on short time frames, which would lead to a bounce. And I'm very happy to say, guys, that I did take this one myself as well. You can see here, I wrote the 69 puts. We wrote these on the Tuesday session right in the afternoon, and we got about 49 cents for them. So well above our 0.5%. 0.5% would have been about 35 cents, and we got 49. Very happy with that trade as well. That one as well was a big win. ON Semiconductor closing barely above 69, but did indeed close above 69. If you would have been a little bit more patient than me even, right, you could have potentially even gotten the $68 trade. These $68 were trading for a little bit less. They were trading for about 32, 33 cents at the same time I took this one. So if you were a little bit more conservative, even the 68 strike would have been open for you. So very happy with the way that one played out, guys. Now, moving on to the next one that we had for last week. The next one was Datadog, cybersecurity play. And Datadog, we've been looking to trade this one below 119, preferably as close as possible to 117, 116 as possible, which would be this little pocket right here, right? The start of this previous big, nice zone, previous resistance, right? Current support. So this level right here, all the way, 117, 116, 115, as low as possible while still getting 0.5%. And Datadog on the Tuesday session dipped as low as about 118.91. But at that point in time, guys, the dip was very quick and short-lived, as a matter of fact. So take a look at your Tuesday session here, right? So Tuesday we opened really low here. Let me blow it up just so you guys can see. So we did open significantly lower on the Tuesday morning session, but as you can see, guys, if you didn't really cash this before 10 a.m., it was back above 121. So only had about a half an hour worth of time to really get this play properly. And it did open up the 117s, but I did not take this one myself. So if you were very diligent on it, you probably were able to get the 117s, 116s for about 0.5%, talking about 60, 70 cents on the bid. I did not take this one myself, but if you were able to get that, the trade idea was good. It did open up, even though temporarily, but it did provide a beautiful trade opportunity. So happy for all of you that were able to take that trade. Datadog, gorgeous section of current support. And on the monthly, guys, it is the monthly breakout, retest for the monthly higher low, and run. That's why we like this one specifically. And then last one, guys, we're going to take a look at Shopify. So Shopify has been one, same thing as Datadog. Let me leave the monthly chart pulled up for now. It is the breakout of this area of resistance, the yellow line, breakout, retest, looking for the monthly higher low, and run throughout the rest of the year. So coming very nicely down into this area as Shopify pretty much over the last 4, 5, 6 weeks of trading at this point. So very good. However, last week, kind of like Datadog, right? It didn't provide, or kind of like AMD rather. Here's your Monday candle, and here's your Tuesday candle. We were looking for anything pretty much at the 73 or better. So 73, 72, 71. Unfortunately, Monday and Tuesday, it only got as low as 76.15. And I was looking at these strikes all day. The only ones that really freed up, guys, are the 75s. The 74s were barely available, so I wasn't really interested at that point. On Wednesday, they did open up the 73s, but seeing as though a lot of the week had already passed at that point, there really wasn't much premium available at the 73s on the Wednesday session, only about 20 cents. So it wasn't really worth our time, guys. So unfortunately, this one did come down over the course of the week, but it only really dipped into our key zone on the Wednesday and Thursday session. There was just not enough time time left in the week to write the Friday puts and still get a good return on investment for those. So the trade idea was good. We're still going to be looking out for this lower $70 range to act as juicy support. This one was a no trade for me, but we will be looking at it next week for sure, because it's really coming down into our preferred zone currently. So looking very good on Shopify, just no trade out of as of last week, although the idea was good. And now guys, let's jump into the top 5 options plays of this week, and you'll see that a lot of them are coming back because they're just so juicy. Now this one, I'll do the analysis with you guys. I don't already have the designated strike prices, so I want to show you guys exactly how I do this strategy, right? When I'm looking at these plays. So the first play is going to be Apple. Apple, we're going to be looking for it once again in the lower 167.50s. So the first thing I do is we're going to check the expected move for Apple. All right, so we're going to see how much is Wall Street pricing in the move to Apple to the downside. So the downside move is about 166.3. So what I do on the chart is I put a line right down here at about 166.3. That is going to be your expected move for the week, right? So 166 point, what did I say? 0.3. There you go. The line is right on the chart right now. That's the expected move to the downside. So we want to be writing below that strike price. Now, Apple trades in $2.50 increments. So let's take a look at the Apple options and see what's available below 166.30. As you can see, guys, there's the 165s right here, which are trading for about 50 cents. That is not enough. I need to see at least 80 cents on the bid for me to be wanting to make this trade at this strike price. So if Apple has a little bit of a dip Monday, let's say it dips down into the 168, maybe even 167, if it's a really red day on Monday, let's say, well, most likely, guys, the 165 puts will open up for the desired amount. So I'm going to be keeping a very close eye on these. If you're more of an aggressive bull on Apple, you can consider the 167.50s. Those are already paying roughly 0.5%. I would just be very, very cautious this week, especially because of CPI. So I personally am going to wait for the 165s if they do open up. Now, Apple, very juicy trade, very solid company. So I'm very excited for this one again this week. Second, we're going to come up with some semiconductor companies again because they are so thematic with the AI theme this week. So the overall bulls are behind us currently. So AMD still going to be looking for this area. Now, AMD has come down a lot on the Thursday session. We're now trading about the 170 mark. So first thing we do is we go into options AI, and we take a look at what is the expected move for AMD over the course of the week, and then we want to find puts below that. So the expected move is about 163.30. So similar to Apple, 163.30. Let's do it about approximately right. The expected move is right down there. Wow, perfect. It's right into our green box of support. So we want to be getting lower than that if possible, close maybe to 160. If we can even get 159, 158, that would be the all-time best case scenario. So let's take a look at AMD options below our expected move of 163. And you'll see on the chart right here that we can actually get some decent premium for them. So take a look at the 160s. The 160s are currently offering 83 cents. That is above our 0.5% minimum of 0.8. So looking very good. We could, if Monday opens up a little bit red, let's say AMD opens up in the lower 169, 168, 167 area, then it may even open up better. It may even open up the 157.50s. So we want to be getting as low as possible, guys, in these strikes while still getting 0.5%. So I'm interested this week, 160 to 155, as low as we can possibly get if we get a red Monday. So that is going to be a very interesting trade. Now, the second semiconductor trade that we're going to look at today is going to be Intel. So Intel has been selling off aggressively over the past 3 days of trading and is really getting crushed right now on the lower time frames in terms of your relative strength, right? So the RSI on the 4 hour is crushed. The RSI on the 1 hour has been crushed now for 2 days in a row. So a bounce opportunity is starting to manifest potentially for Intel. Now, keep in mind, guys, we're in a very juicy area of support currently. We're talking about 38 down to about $36 is the area that we want to be targeting on Intel stock, because we're just looking pretty much right now Just looking for extended monthly consolidation into this big range of consolidation. If we can get as low as possible, right, towards the 36 mark, you can see how often this has played as a good area of congestion in the past. And our long-term bulls should be here to buy the dip, especially when that's coupled with short-term oversold conditions. That's why I like this one. So let's take a look at the expected move on Intel stock for the week, and we'll see if there's anything available below that. So the expected move is 37.38. So let's draw our little line on the chart. Let's just move this one right here. So 37.38 on the chart. That is right about down here, right? So it is very close to the lower end of what we want, right? We want $36. So let's see if we can find $36 on the options chain for Intel right now. Now, let's take a look at the options chain, and you'll see, guys, that the 37s right here are paying about 0.5%. So 0.5% of this will be about 18 cents, 19 cents, and the 37s are paying above that. Now, if Intel continues its drop into tomorrow's session, let's say they open towards $38, the flat $38 mark, then we may be able to get even better. Maybe the 36.50s free up, maybe even the 36s, depending how much Intel drops tomorrow or Tuesday. One thing's for sure, I want to get as close as possible to 36.50 as I can, which is the lower end of this. Will just increase our possibility of having a nice little bounce down in that area and collecting all that premium by the weekend. So take a very close look, guys, right? 37 down to 36 strike as low as possible while still getting our 0.5%. If I see 0.5%, guys, on the 36.50s or the 36s on Monday or the Tuesday, I most likely will be taking this trade. So looking very good on Intel. Now, the third trade for the week is going to be Palantir. Palantir once again coming back, and you'll see a lot of these trades come back on a recurring basis if they're still within our areas of support. That's why you'll see from week to week a lot of similar plays come out, guys. They're just the most solid plays that I'm finding. Keep in mind, my watch list is well over 400 stocks, right? So I could be giving a number of them, but I always give you guys the ones, number one, that I find most safe, and also number two, the ones that are at the biggest areas of support that I can find, which really just increases the odds that we just can farm premium and not get assigned at risky levels, right? So this one is going to be Palantir. So Palantir, much of the same analysis as last week. Palantir, we really want to get as close as possible to my green box. It is a monthly breakout uptrend, and we're looking for the retest of this lower range, monthly higher low for further appreciation later on in the year. So we've been pulling back significantly on Palantir the last couple of weeks, which is opening up trades in this section right here, 21.50 down to 19, as low as possible. We want to get the best price possible, guys, right? So in terms of Palantir, step number one, of course, let's go into options AI and derive the expected move. So you'll see Palantir here for the expected move on the week, 21.95. So I'll do my little line right here. So 21.95 right about there. And we're going to look anywhere below this. So 21.50 down to about 19. How much can we get? So let's go on to the options chain now. If you don't know what options chain I'm using, this is just the website from the actual NASDAQ, just NASDAQ.com. You can find this page on Google. Just do NASDAQ options chain. You can enter any symbol you want. So on this one, you'll see that for the Friday expiration, the 21.50s are available for 0.5%, right? 0.5% would be pretty much 11 cents. We're above that now. So number one, if Palantir tomorrow or Tuesday opens up and comes down into the lower 22 range, maybe even high 21s like it did last Tuesday, for sure, it will open up the $21 strike. I would not be opposed to doing the 21.50s myself. I think it's a good level, but guys, if it opens negative on Monday, right, we want to be getting as low as possible. So that's why I'm going to be keeping an eye, either the 21.50s or the 21s. Now, if Palantir opens on Monday, let's say it has an extremely red day and goes down 5% to 21.50 directly, well, on Monday, if it's already 21.50, am I going to be writing the 21.50s? No, we have to go lower, right? And it's in our best interest to go as low as possible. So just keep that in mind, as low as possible while still getting 0.5% on the bid. Now, that's it for Palantir. Our before last play is going to be Shopify. Shopify, another one that's come up on the channel fairly regularly over the past couple of weeks. Why? Because we've just maintained this beautiful range of support. So as long as it stays down here, guys, I'll continue to play Shopify because we're looking for the longer term monthly retest and then run. Shopify has great fundamentals. They've turned their business around, great cost management, and return to profitability for the company. Has everything fundamentally that you want to see for a recovery story. Now, with that in mind, let's do a little bit of analysis here on Shopify, see what the expected move for the week is. And we can see that Shopify, the market is expecting 72.38 to the downside. 72.38 is really getting close, guys, to the lower end of our expected range, right? We want to get as close as possible this yellow line, which is about $70. So now I'm starting to really like these strikes. Now let's go into Shopify on the options chain and let's derive exactly if we can find some juicy options premium here. So you'll see, guys, that in terms of our expected move, right? Shopify expected move 72.37. We want to be getting 72 or better on the strikes. And you can see 72 is currently offering about 53 cents. That is over 0.5%. We need to see a minimum of 36 cents. Now, the minimum is even available on the 71s, even better. So if Shopify tomorrow opens either flat or red, maybe it comes down 75 into the 74s, then we're going to be shopping as low as possible while still getting our 0.5%. If that means that the $70 strike opens up, perfect. I'll do the 70s, 70, 69, even 71, guys. I love this stock in this lower level right here, 71, 70, 69. All of them are good in my opinion. Just depends on the risk you want to take. Personally, myself, I really want to be trying for the $70 contracts. The premium is not there yet, but a little bit of a nudge down here on Monday or Tuesday could indeed unlock the $70 strike. So I'll be going with one of these three strikes over the course of the week. Now, that's pretty much everything for our top 5 plays. Now, I also always have some bonus plays that I'm constantly, or sorry guys, there's one more actually. Number 5 is going to be Expedia. So Expedia has been one that I've been watching for a while. Same reason. It is a monthly breakout of a consolidation range, retest for the monthly higher low, and run throughout the year. This is also a favorable trade because it is travel and entertainment, something that will continue to boom in 2024. That being said, it's coming up on a very juicy area, guys. Below 130, 128 to 125 is the area that we want as close as possible to this green line, which is the 200-week moving average, and the horizontal prior resistance, which is now support, could provide us a very good opportunity for a little bit of a test here and then have a little bit of bump from the bulls. So let's take a look at Expedia in terms of the expected move for the week. So Expedia, you will see, guys, that the expected move for the week is about 128.10 to the downside, coming close to our desired location, right? So that is right about here, quickly coming to our target, right? So we want to target below 128 as close as possible to 125, right? So let's take a look at Expedia right here, and we'll see if some premium is available on 128 or below. Now, you can see here that for the 128s, they are paying over 0.5%. As a matter of fact, you can even get the 127s, right? We would need to see about, let's call it about 64 cents, 63 cents to really get this one correctly. It is almost there. If Expedia drops a little bit on the Monday session, let's say we open up into the lower 130s, maybe even 129 on a heavy 1-2% dip, right? That will definitely open up these lower strikes. Maybe you can even get the 126s or the 125s. So my desired strike, guys, obviously, if Expedia has a very negative day on Monday, opens up 3% to the downside, already at 126, 127, well, then we want to go a lot lower, guys. Maybe you even get the 123s, 124s, right? Just watch how this premium moves down the strikes depending on the size of the drop. Crucial to always pay attention to that. So I want to be getting as close as possible to 125, guys. 127s are still good, but if I can find 0.5% on the 126s, I'll be very comfortable in writing those strikes. Expedia, gorgeous area that we're coming up on right now. And the company has amazing fundamentals here, guys. PEG ratio of only 0.54, and I did that analysis at 139. It's even cheaper right now. Company has outstanding growth, and I loved their earnings call. So that's pretty much all the plays that I had for you guys for the week. Now, I always provide some bonus plays just to keep on the watch list, just so you guys understand what type of plays I'm constantly looking at. Now, these won't be part of the top 5, but they're always in my watch list up for consideration. Number 1 is going to be Baba. Baba doesn't respect a few of my rules in being in a monthly uptrend, right? Monthly uptrend is obviously crushed at this point. Monthly downtrend is clear. The reason I like Alibaba is the valuation. Alibaba, I'm always looking to play this myself. Feel free not to trade it, guys. None of this is financial advice anyways, just showing you guys how I shop for plays. Baba, if we come down here, down to lower $170, $69, I'm going to be looking to make some short put plays on Baba. Great area of consolidation over the past 3, 4, 5 months at this point. And the valuation is so cheap, guys. It really wants to run. So I'm trying to get it as close as possible down here. Second play I'm always looking out for, guys, is the SoFi. SoFi around the $7 range. Why? You'll see why. Gorgeous, gorgeous, gorgeous area, guys, of the breakout retest. So we're in a monthly uptrend, holding this lower $7 range. Gorgeous support. It's been previous resistance a number of times. Current support level. So every time we come down here, $7, I like the valuation. I like the company. I like the recovery story. So I'm always looking to play it down here. Another one is going to be UPS. UPS, constantly looking here, guys, 140 and below. Really love this area on the stock. It's a lower range that we've kind of been, lower end of zone that we've been kind of trapped in, guys, ever since the month of October. Provides some good value down there. So that one's always on my watch list as well. Another one is Johnson & Johnson. Johnson & Johnson actually in my target area right now. We'll see how that one goes. The premium's not amazing on this one because the volatility is usually low, but it is in my desired range right now. Take a look. Resistance, support, 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 blasted through it, but still support and currently still support. So Johnson & Johnson, if I can look at this one, guys, 150 and below on a very big red day, right? We have some previous, but this zone is the first zone, but down here we also have a lot of choppy area as well, and that's all the way down to about 145. So if we can get lower right here, I'm going to be looking for Johnson & Johnson maybe this week as well. Very solid healthcare play. A few others that I always look at here, guys, I'm going to be looking at PayPal maybe. PayPal for a retest of the 63 down to 61. Very nice current breakout area, right? Even though we lost it on the temporary daily, I'm still looking for the confirmation right here and the continuation of this gorgeous new weekly uptrend for PayPal. So if we come down and retest this area, could be nice for a little bit of a swing trade. A couple other ones that I'm looking at, guys, and then we'll pretty much be done. Elf Beauty. Elf Beauty has sold off significantly, coming hot down into our next area that we'll be targeting, about the 150 down to about 140 range, let's call it, right? This previous all-time high, great area of support. If we come down hot into this area, guys, if we start testing the 150s this week, there may be some premium to be had in the 145, 140s because there's a lot of volatility in this stock. The options premiums are usually quite juicy. So we're going to be looking down here in this area. Love this company. Another one is going to be Caesars. So Caesars, always down here. We've been playing it so much on the channel, guys, right? If we come down below here, $39, $40 level. If I can see this on a Monday or Tuesday, get some juicy premium down here, 40, 39. Always looking to play Caesars. And the last one that's coming back to one of our zones is Pepsi. So Pepsi, I've talked about this one a ton when it was at the 165, 162 range, was always a good trade down here. Now it's coming back for the retest, maybe to potentially run. So if Pepsi dips a little bit intra-week and we come down 167, 166, I may be tempted to do the 165 strike. Pepsi, whenever it comes down into this area, guys, 165, 160, I'm always looking to make some trades on Pepsi. Just such a solid company as a whole. So those are just a few of the plays that I always keep an eye on, guys. Hopefully that has been helpful in education and in if you ever want to adopt this style of trading yourself, well, now at least you have a bit better guidelines to get started with that. So hopefully you guys enjoyed today's video. Hopefully it wasn't too long. And I'll see you guys in tomorrow's daily market recap. Of course, if you enjoyed this video, consider dropping a like. Would really appreciate it for the channel growth. And consider subscribing as well, guys. We just finally got our 1,000th subscriber. I'm so happy, guys. So excited for the growth of the channel. I love each and every one of you. Thank you so much for watching the videos, for engaging with the videos, for subscribing with the channel. I hope to continue to do these for a very, very long time. And lastly, guys, if you have any comments whatsoever on the strategy or any stocks that you'd want me to look at, maybe you think it's a good opportunity, but you just want me to kind of look at the chart and give you and kind of guide you if you're kind of looking in the right direction, looking at the right type of things, leave it down below in the comments and I'll be glad to answer you, right? So take care, guys. See you in tomorrow's video. Peace.